it's really interesting how, like, I've got a really good chart which is worth looking at on the S&P 500. So this is what we're seeing here is, like, if you look at the top of the chart, that's the S&P 500, and if you look at the green line, sorry, the orange line below, that's showing the stocks in the S&P 500 which are above their 50-day moving average. So what we've been seeing over the last couple of months is that the S&P 500 has been continuing to rally strongly, but the number of stocks above their 50-day moving average has been steadily falling. So what this says to me is that the overall leadership in the market, it's really becoming quite narrow of late, and that the gains we're getting, they're largely being driven by a small number of those those mega cap stocks that have really been doing much of the heavy lifting. And what's also interesting is that last week, when the S&P 500 closed at a new all-time high, less than 50% of the stocks within the index were above their 50-day moving average. And that's actually a really rare event. It's only happened 18 times since 1927. And another thing that's interesting is that 4 of those 18 occasions have been in the last month. So that's the highest cluster of readings at a single time since they began taking records of this back in 1927. And it's not just the S&P 500 doing this, it's also happening in the NASDAQ. So it hit a new high last week, another all-time high, but only 31% of the stocks in the NASDAQ were actually advancing on that day. So this lack of breadth we're seeing in the market, I think it is a concern. It's just not how a normal bull market would historically operate. So look, that said, I don't think that's a reason on its own to sell, but I think it's definitely a reason to be a bit cautious, be aware of it, and look, perhaps it's a sign that we're nearing some sort of a mean reverting pullback over the next few months, and something to be aware of for managing your portfolio.